Wall Street's paying well nowadays, but not if you're an investor in the biggest bank names. Bob Pisani breaking it down at the New York Stock Exchange for us tonight. Bob?
Good evening, Scotty. Salaries on Wall Street rose last year to their highest level since the 2008 financial crisis. That's according to a report issued Monday by New York State Comptroller Thomas DiNapoli. The report puts the average salary in New York City's security industry in 2017, $422,500. That's a 13% increase over the year before. And by the way, it's the third highest average on record after adjusting for inflation. Now, that's pretty close to the overall rise in profits. Profits for the first half of 2018 stand at $13.7 billion, 11% higher than the same period last year. Now, the reason profits are up is that revenues grew faster than expenses, up 8.6% in the first half of 2018. Revenue growth was especially strong in wealth management, up 14%. Revenue from trading was up 22%. That's a surprise. Now, this is the good news. The bad news is Wall Street's a lot smaller now. You know, the workforce is 6% lower than it was at its 2007 peak. So here's a little more bad news. Even though the profits are up, investing in the big investment banks have not been winners this year. The S&P 500 is up nearly 9% this year. Banks, you see, up a measly 1%. Big names like Fifth Third and Citigroup, they're down. And the investment banks are even worse. Look at some of these numbers. Morgan Stanley and Goldman Sachs, both down nearly 10%. Goldman, by the way, saw a 17% decline in trading revenues last quarter. That was due to low volatility and the limits on the ability of Wall Street traders to profit from market bets. It was the worst on the street. That stock is now, by the way, the worst performing Dow component this year. But banks have got bigger problems overall. Put together a flat yield curve, put together loan growth that's mostly flattish and higher deposit costs. And you have investors saying, there's better places to put my money right now. Back to you, Scott.
Yeah, Bob, thank you very much. We'll trade it now.
Well,
it's interesting that these stocks just can't get you bid.
No, they can't. And they seem to be foretelling another story. And I'm not going to tell you what that story is because I don't know. I think the balance sheets are excellent. I think the earnings profile has actually returned, maybe not to pre-financial crisis, but I think the valuations are very compelling. And I think higher salaries, by the way, don't mean that suddenly these guys are having gangbusters business. Their businesses have never been more efficient. There's one half the people working at these banks, so paying people who are performing makes sense to me.
The regionals had outperformed the big money center banks recently, but when you look at SunTrust and BB&T, they both guided lower on net interest margins. So that's what's taking the steam out of them. KRE, the regional banking index, is up 5% against an XLF, which is up 1% year to date. You could see that spread actually catch down to those bigger money center banks. These act like utilities. I would stay away from financials.
It's become too easy to avoid these names, Guy, right?
Goldman Sachs is absolutely, there's something going on there. Clearly, there's an upheaval. There's a complete change in philosophy. All the J. Aaron trading, fixed income, currency, commodities, people seem to be out of favor. It's moving towards more of a banking fee-based business. There are going to be some growing pains there, and I think the stock is definitely saying that. Citibank, to me, at one time's book value is the most interesting.
Yeah, I mean, growing pains are exactly right, but this is an industry that's going through full disruption. I mean, just look at what JP Morgan's had to do by cutting commission rates because of the Robinhood app and other things like that. Not only blockchain technology coming along, and demographics is driving that disruption. So you look at the millennials, they don't want these big banks. They don't want to do that. They want to go with Amazon and bank with them.
But their profitability, Brian, is extraordinary. Look at JP Morgan.
I agree, but they can't get out of their way. Listen, I've tried it a bunch of times this year. They don't go up. They don't go up.
Okay, all right.
Right, I mean, you would think, okay, you got a bull market. The S&P's not all that far from a new all-time high. You got strong economy.
You've got 3% GDP. Yeah, and these guys should be levered to that. So, but JP Morgan had record profits on high ROE. So that, to me, is enough to hang in there.